Welcome to the SDA Housing Podcast, brought to you by Ndis Property Australia. Before starting this episode, we need to provide a general disclaimer. Information contained in this podcast is general in nature only. It does not take into account the objectives, financial situation, or needs of any particular person. You need to consider your financial situation and needs before making any decisions based on the information in this podcast. And you should consider seeking independent and professional advice for your personal circumstances. All right, let's begin.
Hello everybody, my name is Debbie from Ndis Property Australia and you're listening to the SDA Housing Podcast, a show that explains, highlights, guides and brings awareness about all things SDA in this ever-changing Ndis world. Now today we're going a little bit, not necessarily off topic, but we're expanding on a very important theme, I think, that is relevant to many people looking at investing in property in general. And we've never actually covered this subject before in any kind of detail, and that is SMSF, self-managed super funds. And I have a guest speaker to tell us all about SMSFs from Jahn
Super.
Jahn Super. Sorry. Chris Jahn, welcome to the show.
Yeah. How are you? It's great to be on the podcast.
Yeah, and very, very happy to have you. You are an expert in this space, so I think you will be able to tell us lots of important information people need to understand about setting up self-managed super funds, why they should, why they shouldn't, what's involved, all of those kind of things.
Yeah. Yep, I'll be able to give people a lot of information about SMSF. There's quite a bit of information to go through.
There's quite a lot that they need to understand, that's for sure.
That's right.
Yeah. Firstly, tell us a little bit about yourself and how you got into this field before we get into the details.
Yeah, I've been a tax accountant for 25 years. So I've had a lot of experience in business accounting and individual accounting and SMSF over that time. And in the last year or two, I've decided to specialise in SMSF. There's a lot of work there in that space and a lot to know. So I just wanted to become an expert in that area and know everything as much as possible. Yeah, so and then I run a firm called Jahn Super, and I have a team that specialises in SMSF establishment and also the ongoing compliance and administration. And we also help clients with some taxation strategies around superannuation as well. So yeah, we're very busy helping a lot of clients that want help with SMSF, and yeah, we're very busy at the moment. There's definitely a lot of interest in that area.
Fantastic. Oh, thanks, Chris. Yeah, we were actually connected via some of our listeners might remember we have talked about the Bali investments in the past. We are still very active in that area, and we have clients investing into the Bali investments using their SMSF, which you also have done an investment in that area. So you're very familiar with how all that works. But that just led us into the whole topic of SMSF in general, because it, as you said, a lot more people now are utilising their super to build, retirement wealth for the future or whatever other reasons. So, well, let's get straight into it. Firstly, tell us what are some of the reasons what are the main reasons that someone might want to consider setting up an SMSF over remaining in a public super fund?
Yeah, there can be a variety of reasons. Like the main reason would be taking control of your superannuation money. So we will direct the money out of the industry or retail fund into a bank account that the clients control. So the money's there for the client to direct into the investments that they want to get involved with. And there's a bunch of different kind of investments that people do want to get involved with, and that is property, direct property with residential, commercial, or potential overseas property like your Bali properties. And people like to get exposure to other assets like gold and silver, and crypto as well is very, very popular. So people the main reason is that control aspect. They get control of the money and want to use it in the way that they feel is right.
Mm-hmm. Sure.
I mean, you might have heard recently, I think it's First Guardian, that super fund actually fell down, and then a lot of people lost their money. And the directors of that organisation were, they had their Ferraris and that sort of thing, and unfortunately, that was people's superannuation was used in the wrong way. And also, you can see like C-Bus, and the C-Bus are huge.
Yeah, they're massive. Yeah,
and I think recently they got fined 21 million for doing the wrong thing. So, people. The main reason is people are like, okay, well, it's best I take control of it, and so it's not being used for the wrong reason or agenda.
For sure, yeah. So who's the ideal candidate to set up an SMSF?
Yeah, well, they do have a different fee structure than an industry and retail fund. So clients need to pay around $2,500 a year for the different administration and compliance obligations, and that includes like ATO levies, ASIC fees, audit requirements, and financial reporting, accounting, taxation. So clients need to budget that two and a half. So someone with a small balance, it's not going to really work for someone with a small balance, as the income's not going to really pay enough of those expenses. So there's a general guide that people say, you really should have 150 or 200,000 in your super fund.
Yep.
To set up an SMS
to make it worthwhile.
To make it worthwhile, but there is no legislative minimum amount. Like if someone wants to set it up with 50,000, they can, but they just really need to factor in that fee structure.
Yeah. So I guess with a public fund, you're paying more on a percentage basis, whereas this is more of just a fee basis.
That's right.
Those limits.
The industry retail, they might charge an admin fee or a small percentage of the balance. So yeah, fee structures are quite different.
And they're related to the balance, whereas they are not in this.
Yeah, that's right. So a self-managed super fund, like that fee structure should stay pretty standard. Like it shouldn't grow too much, that fee structure.
Mm-hmm. Good.
Fund grows.
Yeah. So obviously when you've got a much higher balance, then, you're probably a lot better off. Amongst other reasons, but just in the fees alone that you're paying.
Yeah.
Cool. What are some of the common misconceptions that people have got about SMSF before they actually start down the process of setting it up?
Yeah, I think people are quite sort of scared of the process, or they think they can't do it. But like for a firm like us, we do handle all the paperwork in the background, and we hold clients' hands through the process. And we try to make it as easy as possible for them. So a lot of people are scared of the process, but I think no one should be scared about it if they're willing to go to the bank and set up a bank account. Like there's a few little things like that, but they do have to make decisions on where to invest. That could be a little bit scary, but your SMSF could engage an advisor as well if you want to get an advisor involved. So there are options there if people are worried about what to do with the money. So there is a bit of a fear factor there, and it's probably not warranted really with how easy it can be.
Okay, good to know. So run through some of the pros and cons of an individual versus a corporate trustee structure.
Yeah.
For SMSF.
So when we set up a super fund, the client needs to make a decision on whether or not it's a corporate trustee or to have individual trustees. So if there's only one member in a super fund, you actually have to have a corporate trustee.
Okay.
So that's one of the considerations, and probably half of the people that set up SMSF, it might just be one person. So in that case, they need a corporate trustee. There is an extra cost there with the setup of a corporate trustee. It costs an extra $1,000 to set up the company trustee, and ASIC charge $67 a year on the compliance of the company. So it is quite a small cost to have that corporate trustee, but there are some advantages where you can bring members in and out of the fund a lot easier. If you have individual trustees, you have to change all the titles of the assets, and that can be a problem, an administrative problem for the fund. So in a lot of cases, clients will look at the corporate trustee option more commonly.
Mm-hmm.
So that's one of the main reasons. And also with a corporate trustee, it does continue if a member was to pass away, the fund does continue on without more hassles there.
Sure.
And there can be also asset protection there with having that corporate trustee, having a separate legal entity looking after the super fund.
Yeah.
That can be an asset protection measure as well. And a lawyer might be able to explain a little bit more about how that could assist in any kind of legal battle. Mm-hmm. Yeah. So, so the corporate trustees are more common. We do more corporate trustee setups.
I'd imagine it is more common.
Yeah, that's right. And we find like through the life cycle of a super fund, like people move from an individual trustees to a corporate trustee because of those complications with changing members and that sort of thing.
Mm.
Yeah.
Cool. Okay. So what are some other important things to consider before establishing an SMSF? Obviously, you've just run through the costs. But what about compliance?
Yeah, so an SMSF does need to lodge a tax return every year. So our team will put all the information together, all the financial information and build the financial reports for the fund, like a profit and loss and a balance sheet. And then that does need to get audited by an external auditor. And the auditor is checking to see that the super fund's been run properly, like the members haven't accessed the money early. And that can be an attraction. People like the money is available, and for some people it's too much of an attraction, and they, in some cases we get people that do access it out of necessity, and that does generally cause a lot of problems. So we have to try and get through the audit process and get a clean report from the auditor. And once the audit's been completed, we will lodge the tax return, and that finalises the compliance obligation for the year.
Mm-hmm.
Yeah.
Okay. So what other compliance issues do people need to be aware of? I know that there has to be, for example, income and positive growth and all those sorts of things within the structure, within the actual fund. Yeah,
clients do need to sign off on an investment strategy, and that needs to align with the client's long-term investment goals. Mm-hmm. Yeah, so that's that. The auditors do check the investment strategy, and sometimes a financial advisor will help the clients with the investment strategy, and in a lot of cases, the clients will just do the investment strategy themselves.
Right, okay. And how often should that be renewed, that strategy?
Usually renewed annually. Mm-hmm. and updated annually for any changes of assets. And if people want to get involved in a particular asset, it might need to be verified on the investment strategy, or more sort of talked about as why that relates to their financial goals and how it's going to help develop funds for their retirement.
Right.
Yeah, that's when a client invests in, say, a Bali investment, they would need to demonstrate in the investment strategy how that will help with their financial goals.
Mm-hmm. Sure. Yeah, or any property, I guess.
Yeah.
Because it's going to be a pretty major investment for if you're buying an entire property. Obviously, there are fractional investments that are a smaller outlay. But, yeah.
There are minutes to do each year, and our team handles the minutes that are required. And if someone wants to start up a pension in their fund, like our team would help provide the minutes that the client sign to action the pension.
Okay.
So all the paperwork is sort of done in the background by a team like us, or an SMSF provider should do everything in the background.
Okay, so when you say pension, that's so they when they reach retirement age, they can then access that via a pension process.
The key date for SMSF or superannuation is 60. So that sometimes is confused by the Australian pension date, which is 67 age. So a lot of people would realise that they can access their super
at 60.
Yeah, and at 60, people can put their super fund into either an allocated pension or a transition retirement pension. Mm-hmm. And that's where our team tries to look out for those opportunities, because an allocated pension does determine the fund as a tax-free fund.
Mm-hmm.
So we can have 2 million of assets in super or SMSF earning tax-free income at 60 potentially.
Yeah.
So try and look for that opportunity. And that's where superannuation was such an attractive structure with that ability to class the assets as tax-free. So with property generating good rental, if you can make that tax-free, that could potentially save you, thousands and thousands in tax.
Absolutely.
So what we find is people in their 40s and 50s will be trying to get as much as they can into that superannuation system so we can take advantage of those pension rules at 60 and class the assets as tax-free.
Okay.
Yeah.
Are there any sort of recent regulatory changes around SMSF compliance that people should be aware of?
That's right. There was a lot of discussion that the government was going to tax unrealised gains for assets for over 3 million. And thankfully, the government has come to their senses and they've revised that, and they're not going to tax unrealised gains, which is a crazy idea to tax people on money they haven't received. So they have changed that, and they're looking to revise that. They're scrapping that unrealised gain rule, and they're going to tax an extra amount on amounts from 3 million to 10 million. There'll be an extra income tax of 15% on the original 15% tax, so it'll be 30% tax.
Right.
Yeah. And then when people get over 10 million in super, I believe the tax rate pushes up to 40%.
Wow.
Yeah. So it's they're some of the rules that I don't think they've gone through the Senate yet. They're sort of still drafted, I think, but we're expecting some changes to go through, and it's going to be something close to those rules that they're looking at now with those what I just mentioned.
Do you see that impacting people's investment strategies?
Yeah, I guess for the high net wealth people it's 3 million per person. So, husband and wife would need to have over 6 million before those rules start to come in to play.
Mm-hmm.
I guess we're probably maybe in 20 or 30 years, that's when it's going to start capturing more people. But for now, in the short term, it's not going to be a huge issue. Yeah, because you need to have 6 million, potentially say 6 million for a husband and wife, before that comes in.
Okay. Let's talk about exit strategies or succession planning considerations, those sorts of things. Tell us more about how that all works.
Yeah, do you mean in terms of like what to do to close the super down, or with?
Well, there's that too, or, winding up the super fund and also succession planning within the SMSF.
So people will say, okay, well, I don't need the super fund might not be working for them. The fee structure there might be too much, and it might be better for them to move the money out of super and into their own name to save tax or to save it on administration. And that's a relatively straightforward process.
And that's obviously once they've reached retirement age or
that's
super access age.
That's right. Once they've reached over 60 and they're retired, they will liquidate the assets in the fund and then transfer that out of the super fund and pay out a pension as a lump sum and close the fund down.
Mm-hmm.
Yeah.
So pretty straightforward.
Yeah, we do that quite a bit. Clients just make that decision that they don't need it anymore and they'll close it down and stop any more fees coming out.
Mm-hmm. Cool. Yep. Yeah. Talk us through how sort of succession planning within that SMSF can work.
Yeah, like are you talking about succession in terms of business succession?
Or family members willing?
Yeah. Yeah. We don't handle a lot of sort of estate planning in our office sort of thing, but, we usually direct clients to an estate planner if they want to talk about those kind of issues. But they are really important, like really savvy people are implementing strategies in their 60s that look at where the money's going to go, after death, because
if they haven't spent it all.
That's right. So there's a strategy, like for example, there's a strategy called recontribution strategy. So what happens is everyone with their super fund, they have a taxable percentage in the fund. It's a taxable amount and a tax-free amount. So if someone passes away and the taxable portion goes to a non-dependent, the government will take out 15% tax. So clients can implement recontribution strategies and they can take money out of the fund and then recontribute the money through to the fund as a non-deductible contribution. Okay. And from doing that, it actually reduces this taxable percentage down. So when they do pass on, the ATO is not going to take out that 15% tax. So that's one of the things that we see savvy people doing, is looking at those recontribution strategies in their 60s.
Sure. Okay. Interesting.
Yeah.
Okay. Let's look at sort of the actual investment strategy. What does a good diversification look like within an SMSF?
Yeah, it's great to have diversification's a great thing, and having a number of different assets can really help your financial situation. If one asset goes really well, or if one asset was to go bad, you've still got the other assets hopefully performing well. So diversification is really critical, and it's not just in one asset, but might be over a different classes of assets, where shares and different kind of shares in different kind of sectors, and property, and maybe property in different areas, or a combination of different assets and different classes of assets is important for people to consider. And it's another area where, like, as we're actually not licensed advisors, so clients will work that out themselves, or they will engage a financial planner to try and work the strategy out and what's best for them. And then our main job is to make sure that all those assets are complying assets and the paperwork's done properly. But yeah, it's good to have as many different kind of assets as you can.
For sure.
But often with SMSF, like, it's quite often clients will have only one type of asset. They might have a property in their fund. They might have one property, and that's okay with the rules. And so the fund might just like hold one property in the fund, and that's not a problem for the fund. But that situation, there isn't much diversification there. But
yeah, if something goes wrong, that's pretty dangerous.
That's right. If there's a serious problem with the property, that could cause a problem for their retirement goals.
Definitely, yeah. What do you see as being the most common assets people do put into their SMSF? Is it property, or is it shares?
Yeah, I think property is the number one. People love property in terms they can see what they're buying. They know what they're getting into, and people understand property a lot more than shares. So we see that really as a common request, or people who are contacting us are wanting to know about how to get property. And there is an opportunity where people can use a loan structure to get a loan to buy a bigger property. So we help a lot of clients with that process about getting a loan, and the clients will usually go through their broker or their bank and find out how much they can borrow with the superannuation structure, and the banks will look at the contributions and the balance in the fund to determine how much they can borrow. But that gives clients an opportunity to maybe get a good sized property with those borrowing rules.
Mm-hmm. So yeah, just run through that in a bit more detail. I know you can only borrow 80% with super.
Usually, like, some banks are different. So the clients will need to put a 20% deposit on a property,
mm-hmm.
and then the super fund will pay the 20% deposit plus stamp duty and fees.
Mm-hmm.
That's right. And then we set up an additional structure that helps that process. We set up a bear trust.
The bear trust, yeah.
Mm-hmm. The bear trust for that, and that's quite common for people that want to do that to buy property.
Mm-hmm. Yeah. And where was I going with that train of thought? The lending for that. Do you think that it's actually easier for people to borrow to purchase within their SMSF than outside?
Yeah, I think it's there is a little bit more restriction. I think the rates are a little bit more. It's quite close, but the rates are a little bit more, and there's sometimes a little bit more in fees. So people need to weigh up if that's the right thing to do. If there's with the bit high interest rate, a bit more in fees, mm-hmm. but the setup structure is a little bit more. So people need to weigh up that.
Mm-hmm. But they need to really just be aware that what they're contributing outside into the SMSF, in addition to any income that the property is making, is... Yeah,
that's right. The great thing is if someone buys a property in their super fund, they might be contributing super or cash into their fund through work contributions or salary sacrifice, and that salary sacrifice into super can help pay the loan down faster than what you normally could. So what we see is we've seen clients pay off the loans quite fast because they've salary sacrificed more of their wage into super.
Which, of course, is at a lower tax rate.
100%. So, you're getting your gross income taxed at a much lower level. You might be getting taxed at 47% or 39% in your own name. If the money goes into super, it's only taxed at 15%, and then that money is then used to pay down the loan. So that might give opportunity for people to pay off the loan faster and then get another property and
absolutely
building up super for their retirement
and build that portfolio building structure within the SMSF.
Yeah, ideally to have a portfolio with their super fund would be an excellent strategy.
Yeah. Keep it under 3 million or 6 million if you're a couple.
100%. Yeah.
So, is there any other risks that people should be aware of with buying property in an SMSF? I know that you know you've got the income coming and it can't be negatively geared, that kind of thing.
I think with if you got a situation with pensions that people want to access their money from super, that could pose a problem. If one of the members said, "Okay, look, I want to get out of the fund. I want to direct my super somewhere else." If the assets are in a property that can't be sold, that person's not going to be able to get the money as soon as possible. So that would be one example where a member could be quite upset because they might not be able to get their cash out of the fund. And then the clients may have to sell a property earlier than they would normally want to. So that they can be issues, and that's where an advisor might sort of run through those potential problems that could occur. Yeah, but trying to think of other problems. I guess if a property has maybe some structural issues or something like that, there might not be enough cash in the super fund to pay for those issues, and that could pose a problem because the bank might not be able to increase the loan. So that could pose a liquidity issue for the fund if there was, say, a structural issue on the property.
Sure, or if it's not getting the rental return.
Yeah, if it's not getting the rental return, or maybe there's a roof that needs to be replaced or something like that, and it's not covered by insurance or something. And if the fund needed $100,000, but it might not be able to access the money for that.
Sure. So this is why a buffer is very important.
Yeah, that's right.
And in your, don't spend to the max of what you think you can afford in your super. You need to have plenty of a cash buffer there.
Yeah, that's right. Exactly. Yeah, have a buffer of some kind if there's any large expenses that needs to be spent on the property. It's strong consideration.
Yeah, and I guess that then comes down to picking your property very carefully, purchasing something off the plan that doesn't need settlement until down the track. You can contribute more into the fund before that time happens. You're going to have less maintenance issues for a good whack of time. You don't have to worry about that. So, and again, the capital growth aspect. If you're going to get something that's going to see good capital growth over a 7 to 10 year period, by the time you want to maybe do something, you've really increased the value of your SMSF balance.
And that initial research is really critical to make a great decision on that property purchase.
Yeah. So you definitely don't want to be buying an SMSF property that's, going to need a lot of management and a lot of maintenance and those sorts of things.
That's right. If it needs renovations and that kind of thing, that could pose cash flow or liquidity issues for the funds.
Sure. Yeah. How have trends in SMSF membership and investment strategies evolved in the past few years since you've been?
Well, so there's around 700 to 800 SMSFs being established every week.
Wow.
Yeah. So it's a bit of a hot space at the moment, and that sector is really growing. I believe there's maybe 1 trillion under management for SMSF. So there is a trend towards SMSF as people want to take control of their money.
Yep.
Yeah. So there's definitely hot space at the moment.
And investment, obviously, we've just been focusing on property, but have you seen investment strategies sort of shifting
Yeah, like you might have seen 2 or 3 weeks ago, there was a huge line of people outside I think it was ABC Gold Bullion, the the gold bullion place. There was a huge line out the front. So people wanting to get gold with their super fund, that's been like a bit of a trend. There's a real push for gold prices at the moment.
Mm-hmm.
And we're seeing that because of some kind of like, printing of money with the government. Some people are a little bit worried about, the direction of the economy or how currencies are kind of used. So gold and silver has been really attractive the last few years, and also crypto has been really a growing space as well, as people want exposure with crypto through their SMSF, and a lot of people like Bitcoin, for example, and that's been a really high achieving investment over the last 15 years. So those gold and crypto and property have been really the number one sort of areas where people have been getting into.
Okay.
Yeah.
Do you think there's other emerging opportunities out there that you're seeing starting to show this?
Yeah, like I'm a big fan of Indonesia with the investments there, because I feel sometimes you can get a better return. There's a growing tourism sector there, and there are opportunities through that space to get involved in property.
Mm-hmm.
So, I mean, I've lived in Indonesia before, and I understand the rules there quite well, and I can help clients navigate that side of things if they want to get involved in an investment in Indonesia. And
just walk us very quickly through the compliance of that, of sending your SMSF funds offshore.
Yep.
What risks and complications might there be?
Yeah, so there's going to be more risk. There's potential for more return, but there are higher risks with the Indonesian government. Might be a little bit different than here. They might target foreigners and maybe change the rules abruptly. And Indonesia is a little bit more unstable in terms of its geographical sort of location. So there are some higher risks there, and they can have property disputes and things like that with who owns the land. So people need to be careful and get involved with trustworthy entities that don't make a poor decision.
Mm-hmm.
But so we did check with the ATO about some of those arrangements in Indonesia. The clients are buying leases in a lot of situations. They'll get a lease for a 30-year term or a 50-year term, and we did check that with the ATO, and it came back as an eligible SMSF asset because it is deriving rent over the life of that property lease.
Mm-hmm.
Yeah, so that's an opportunity for people to pick up a good rental return and diversify their super fund into different classes of assets and different country and that sort of thing.
Yeah, it's good to know that it's an option for people.
Yeah, that's right. So it's another option to diversify their assets and hopefully
precisely
get a good return and try and build up their assets for retirement.
Yeah. Okay, I think that was all the questions that I had thought up regarding this. Is there anything else that we haven't touched on that you wanted to just point out people need to be aware of or should understand?
Yeah, just like it's not, self-managed super fund is not scary, and anyone can do it, and whether we can't advise people if they should or shouldn't with the licensing situation, but if people want to do it, like it's really achievable. A team like us can sort of help clients through and hold their hand through the process, and then they can get involved with really exciting assets that they're interested in and watch their wealth grow and be really invested in what they're doing with their wealth, rather than, I think it's been too easy for people to not think about their super and just leave it in the hands of organisations who are not sure exactly what's going on behind the background. And that's where people can lose their money, or the money can be used for the wrong agenda or purpose.
Sure, or they're just not making what they potentially could.
That's right.
Yep.
That's right. So, yeah, it's a funny stat actually that SMSFs actually perform better as a whole than the normal industry retail. I think there's been stats on that where the returns are better through SMSF.
Yeah.
Interesting because SMSF is do it yourself. So that's people who aren't investment professionals beating the investment professionals.
Yeah, that's a really good point. Wow.
Yeah. So it's quite interesting with that stat. I was actually quite surprised just to see that stat that SMSF returns had been more.
It just goes to show that there is a very good reason to do this if you feel like you've got the time. And I guess it wouldn't take too much time, especially with someone like yourself there to help you do the compliance and the management in the back end. But, you do have to be more aware of what you're doing and actually think about it.
Yeah, that's right. There is that requirement to think about the investments that you want to get involved with. And yeah, we're definitely there to help people through that process. And there's lots of good SMSF providers out there that should provide a lot of assistance. And you also, one of the huge benefits with SMSF is you can get access to a tax professional that can help you take advantage a lot with those superannuation rules. And with the concessional contribution caps, non-concessional contribution caps, unused superannuation rules, where you can go back 5 years and catch up on the unused super rules. But yeah, for people with less than 500,000, and then the ability to manipulate those pension rules, we can make the funds tax-free. You can do a lot with SMSF and really power your retirement.
Mm-hmm.
Yeah.
Sounds good. So how does somebody get in contact with you if they wanted to get some SMSF advice and assistance in setting it up?
Yep, we've got a website, which is jahnsuper.com.au.
And that's JAHN. I'll have the link in the episode description here, so you can just click on that.
Yeah, so we'd really love to talk with anybody if they're interested to know more, and yeah, hopefully we can help.
Fantastic. Well, you have definitely already helped some of our clients.
Yeah. So
we can highly recommend you with the way you handle these. It's a relatively straightforward thing, really. At the end of the day, people, might not really know anything about it and think they're feeling quite comfortable with their current super status. But, if you feel that it's a path you want to go down, look into it.
Yep, 100%.
For sure. Awesome. Well, thank you so much, Chris. It's been a pleasure. I've learned lots about SMSF funds today that I didn't know previously.
Yeah, thanks for the opportunity to chat with your clients and yourself.
Yeah, absolutely. And hopefully we'll see more people creating their SMSFs and taking control of their super in the future.
Okay, fantastic.
Fantastic. Well, thank you everybody for listening, and see you next time.
We hope you enjoyed this episode. Please make sure you are subscribed and following us so you can keep in the loop with all of our upcoming episodes. We would really appreciate it if you could leave us a 5-star rating, a written review, and to share this podcast with those that could benefit. Until next time, catch you on the next episode.